8/3, 2011, 5:59 a.m. Pacific Standard Time. Market opens up in 31 minutes. Pre-market is that the ADP has come out slightly better than anticipated or expected. Markets have sold down, have broken key movement averages across the board. Refer to stockmarketpending.com index analysis. You'll find it all there. As far as the trade management on the OPEN called Open Bell, missed its earnings. MicroStrategy had a problem there, down 12.44 handles. So this is the gap down list, and they're tail end of the earnings. Black box, Garmin missed by 3 cents. That's what the gap open down is about, and this is where these names are coming from. And that is the headline tied to it. Now on the other side, as we gap up from the amount of selling that we have in volatility, is that the trade management is that the upper areas of resistance on every one of these gap opens will hit and then remain to have distribution. Every one of these names right here, every one of these names right here will go up and test their higher resistance levels, and they will be met with a red bar next to the green bar, and the weakness will build on the opening bell. As we go through that 20-minute electronic tape, like Star Wars or 4th of July kicking off, is that the trade remains the same. The elevation from the gap, meaning the price elevation, is that we take a look that in the first part of the hour of the trade and going into the lunch hour is how these names gap, how they pull back. If they pull back only just a little bit and they still elevated, what they're doing is they're trying to consolidate their short-term macro or short-term oversold conditions within the volatility, okay? And that the volatility with the same culprits, it doesn't change. It's the same. Here they are, day in and day out, day after day after. The difference in the tape is the pessimisticness that's built coming for Friday is already built in the tape. So the gaps up when they make their highs are reversals. And that the trade management has been totally successful in that regard. The elevation of the consolidation, the strength of the elevation, meaning that the price goes up in the gap, it pulls back, it stays elevated, it consolidates for a period of time, of one of two things happen. You put in one last high, then there's the rollover. Or you consolidate, and then that red bar starts with that big selling, and down they go. The sentiment between bear and bull is pessimistic levels have finally started to peak again, where key areas of support level and volatility increases, just as it was in the sell side, it does it in the upside volatility as well. So we'll be very mindful as to how the Apple trades. Most important one out here today is trading. Now your Sinas and your little Chinese stocks are going to do the same thing. Put the highs in and make lower lows and trends. Volatility to the upside, when they do reverse, what happens is people don't understand how lower lows get made, just like a lot of people don't understand why higher highs get made on an intraday level. Within actual trend or price action movements, meaning that you go up and it's consolidating, but guess what happens? You make lower lows, and lower lows happen. They don't sometimes come right away. Sometimes you will consolidate after a big selling day like yesterday. You can consolidate before you make the next series of lower lows. As far as index components go, well, we'll be looking at where the upper end of those resistances are. We'll be looking at the fear indicator, the VIX and the VXN. As if those things are elevated, that means that stocks will hit their highs and sell off no matter what. Now, on the flip side, if that volatility and that fear indicator starts to decrease, that means that the bull gap is strong. We'll be monitoring both. Trade management will remain the same as it has for the last 30 days on the Nasdaq comp.